Is it time to short Robinhood stock? This is what I'm going to cover in this video. Robinhood stock is up almost 17% today as they have announced the recent quarter earnings. Currently, the stock is at $65 after hours. Since a lot of us already know and use Robinhood, I will just cover the financials and the valuations in this video. Let's now look what caused the big spike in the Robinhood stock today. Robinhood smashed the recent quarter earnings. As you can see on the screen, the number of funded customers grew to 25.2 million. Gold subs are at 2.64 million. Assets under custody are at $193 billion. Now, this may look like a big number, but compared to the big institutions which handle multiple trillion dollars, this is not too big of a number. The net deposits are at $16 billion. Trading volume increased double to triple digits year after year, as Robinhood is taking market share away from its competitors. Robinhood posted GAAP net income of $916 million. However, it is important to note that $424 million is one-time benefit. So the actual profit is $492 million. Robinhood mentioned that they would do a $1 billion buyback. So far, they purchased $5 million. There's still $743 million remaining to buy back more shares. $1 billion may look like a huge amount, but based on their market cap of $50 billion, they can barely purchase 2% of the stock buyback. For the full year of 2024, the revenue grew by 58% year over year. For them to make about $2.95 billion, Robinhood did not provide the outlook for 2025. This is what management said with regards to the outlook. We're not providing a 2025 outlook for total operating expenses and have not reconciled our 2025 outlook for adjusted operating expenses and SBC, the most directly comparable GAAP financial measures, total operating expenses, because we are unable to predict with reasonable certainty the impact of certain items without unreasonable effort. Now, these items include, but are not limited to, provisions for credit losses and significant regulatory expenses, which may be material and could have a significant impact on total operating expenses for 2025. Now, let's look at the revenue mix. As you can see on the screen, the income statement shows transactions-based revenue of $672 million, net interest revenue of $296 million, and other revenue of $46 million. So they're very dependent on the transaction-based revenue. This transactions revenue can change a lot during the bull market and the bear market. It is hard to maintain a consistent transaction-based revenue. However, they grew their transaction revenue 236% year over year, thanks to the bull market and the crypto hype cycle that's going on. We will have to see if they can continue the momentum in the transaction-based revenue in the future quarters. Let's note that they do not give out gross margin on the income statement. However, they report the operating expenses. We can derive around 25% operating margin from this income statement. Let's look at the outstanding shares. They have close to 900 million. They have a share repurchase program, but it can only be very limited amount of shares. Let's quickly look at these basic metrics. As you can see on the screen, the price to sales ratio is over 20, which is considered very expensive. Let's now look at their growth rates for the past few years. As you can see on the screen, for the past 2 years, the growth rate was north of 35%. Now, that's a good growth rate. It is very hard to maintain when the transaction-based revenue fluctuates due to activity in the market. Now, before I show you the valuation, I want to give my thoughts about Robinhood. First, I want to start with the good. Robinhood has an incredible user interface. It is very easy to make transactions. Robinhood has expansion opportunities in Asia. They can also get into other industries like betting. They're also very popular among the younger generation. So there is a scope for a lot of growth. Now, let me talk about the bad. Robinhood is offering a lot of incentives to increase their AUC. For example, when I deposit $7,000 in my IRA, they give me $210 bonus. So it's very hard for them to make this money back from me, as I do very few transactions. Also, they're giving out a lot of money for transfer of accounts from their competitors for big accounts. Those big account holders do not do many transactions, so it's hard for Robinhood to recover the bonus that they give out in form of transaction fees. In addition, Robinhood has a lot of small accounts. Robinhood had to spend money to service these accounts in return to a very little revenue. Let me now move on to the valuation. Before I show you the numbers, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Robinhood. As usual, I will show two cases, one with reasonable assumptions case and the other one with great execution. Let's first look at the reasonable assumptions case. In 2024, they made around $2.95 billion of revenue. For the past 2 years, Robinhood has been growing the revenue by 35% year over year. Even though they have a lot of opportunity to spur growth in the future, it will be difficult to grow fast as they get bigger. So for this reason, I am estimating 25% year over year growth, with which they will make around $9 billion of revenue by 2029. That is tripling the revenue in 5 years from $3 billion to $9 billion. Now, based on the current operating margin and future scale of operations, I am estimating a 25% net profit margin. With this, they can make about $2.3 billion of net income by 2029. So I will assign a multiple of 35, with which the market cap would be $79 billion by 2029. Currently, they have close to 900 million outstanding shares. They keep giving out stock-based compensation, but only buyback, less than what they can give out. For this reason, I am estimating that they will have 100 million more shares in 2029. This will yield stock price of $79 for Robinhood by 2029. Based on the current price of 65, the upside is 21% in 5 years, which is not attractive. In the great execution case, I am estimating 30% revenue growth year over year for the next 5 years. This will enable them to make $11 billion of revenue. This means that they would almost quadruple their revenue in 5 years in the great execution case. I'm keeping the net profit margin at 25% and assigning a 45 multiple. With this, Robinhood will have a market cap of $123 billion by 2029. This will convert to a stock price of $123 based on 1 billion outstanding shares. So based on the current price of $65, this represents a gain of 90% in 5 years. For my personal journey, I would look at the reasonable assumptions case, in which I'm looking at only 25% gain in 5 years. This means that the stock is very expensive and it's way ahead of its fundamentals. Therefore, in my opinion, it's a sell. Usually, it's not bad to short stock like these, which are ahead of their fundamentals and are very dependent on the market transaction activity cycles. However, since Robinhood has a lot of retail following, it is not wise to short the stock. What I can do is wait for the stock to fall below $40 for me to consider opening a position in Robinhood. Otherwise, I would rather just stay on the sidelines. Let me know your thoughts in the comments, and thank you so much for watching.